Hello, good morning, good afternoon, and good evening. My name is Connor Donaldson, and I'm very pleased to offer an initial welcome on behalf of the IAIS and to thank you for joining us today at our second virtual global seminar and ExCo dialogue. Let me start by wishing you all continued health and well-being in these challenging times. Today, 775 people from around the world registered. A great turnout demonstrating that despite the challenges of a rapid transition to a virtual environment, there are some benefits. Before moving into today's business, I would like to remind you of two important housekeeping rules. First, to maintain audio quality, all participants will be on listen-only mode. With that said, we are keen to hear from you. So I would encourage you to contribute any questions you have by using the Q&A function, which you will find at the top right-hand side of this event platform. And second, the event will be recorded and shared on the IIS website and on our LinkedIn page in the coming days. In preparation for this session, we've sought input from a range of stakeholders. You shared your views on topics, as well as a number of questions you would like to have discussed by our executive committee members. These contributions have been key in setting today's agenda and in developing the presentations you are about to see. We will start today's meeting with opening remarks from Vicky Saporta, Chair of the IIS's Executive Committee. Jonathan Dixon, our Secretary General, will then share an update on our progress advancing the IIS's 2021-22 roadmap. Following that, the chairs from our parent committees will provide an update on the work of their respective committees over the first half of this year. We will then have a good period of time to answer your questions about the work of the IIS. Then last, but certainly not least, we will conclude with a panel discussion on the challenges and initial insights from the COVID-19 pandemic. We hope this session will include a dynamic question and answer session. So please do use the Q&A function in the conference platform to ask us your questions. Again, this function is located at the top right-hand side of the platform. If you have any problems today, please do not hesitate to contact our team at iaismeetings@bis.org. That email again is iaismeetings@bis.org. At our ExCo meeting earlier this week, we had an opportunity to prepare for this session, so I hope that participants who have joined in will find it a rewarding discussion. And with that, I'll turn it over to the IIS's Executive Committee Chair, Vicky Saporta. Thank you.
Thank you very much, Connor, and good morning, good afternoon, and good evening to everyone, and thank you for joining us today. Since our annual meeting in December, the challenges of COVID-19 have persisted. The social and economic consequences continue to take a toll. Our members have endured challenges on many fronts. Assessing and mitigating the impact on the insurance markets they supervise to maintain financial stability and to protect policyholders. The global insurance sector has remained financially and operationally resilient. However, risk will evolve, and it is for this reason that our 2021 to 22 roadmap looks to assess and address risks to the sector. Thanks to the great cooperation and collaboration across our membership, we have continued to drive forward our work despite these challenges. For me, this makes evident that the enormous effort we put in as a community of supervisors and people in general interested in insurance supervision and regulation to get to know each other and build standards together over the past years, particularly following the global financial crisis, has really paid off. The relationships of trust we've developed amongst the membership, but also more general relationship amongst our stakeholders, have served us well in these times of crisis. Now on to the roadmap. Our roadmap, published earlier this year, has four main elements. 1, risk assessment. 2, finalization and implementation of key reforms. 3, supervisory guidance on emerging accelerating trends, and 4, implementation support and assessment. In the rest of my remarks, I would like to update you in particular on our work on the first 2 of these priorities during the first half of this year. My ExCo colleagues will then provide more detail in their remarks about the rest and about what I say. First, risk assessment. The pandemic highlighted the real benefit of the post-crisis reforms, which we agreed as a community of insurance supervisors in 2019 when we adopted the holistic framework for the assessment and mitigation of systemic risk, which includes a global monitoring exercise, GME. If we had not done this, we would not have been able to monitor the risks we faced as a global community. Last year, because of all this work we have put in as a community, including the work of the stakeholders, we were able to quickly adapt the global monitoring exercise and use it to assess potential vulnerabilities arising from the impact of COVID-19. In December, we published the results of the first data collection to mid-year, which concluded that despite the significant initial shock to financial markets, the global insurance sector has demonstrated both operational and financial resilience, aided by supervisory measures providing operational relief and by significant monetary and fiscal support, unprecedented actually in recent years, in financial markets in certain regions. In 2021, we will continue to monitor the impact of the pandemic on the global insurance sector. Second, implementing the agreed post-crisis reforms has continued to be a focus of the first half of this year. Delivering on both the further refinement of the ICS during the remaining 4 years of the ICS monitoring period, supporting implementation of ComFrame, and the consistent implementation of the holistic framework is a key priority for the IIS. Earlier this year, we marked an ICS milestone with the completion of the first year of the monitoring period. Despite the operational challenges of 2020, the first year of ICS monitoring saw strong participation and engagement from insurance groups around the world. We are very grateful for this continued cooperation. And I'm pleased to say that despite the pandemic, these projects remain firmly on track with no planned changes to the monitoring period timelines. Importantly, this year we had the first ICS discussions amongst group-wide supervisors in Supervisory Ecologies, which provided valuable input and feedback to further enhance the ICS. Participation in the ICS monitoring period will grow in 2021, with additional insurance groups participating. So we look forward to getting even more and varied input during the monitoring period. Additionally, work has started on developing the criteria that will be used to assess whether the aggregation method provides comparable outcomes to the ICS. More detailed criteria will be developed for each high-level principle, and in such a manner that the aggregation method is neither precluded at the outset as an outcome equivalent approach to the ICS, nor given a free pass. Not precluded, but not given a free pass. There will be a public consultation on the draft criteria, which, as I said, are based on the high-level principles that we agreed last year, in advance of the assessment of whether the aggregation method provides comparable outcomes to the ICS. We are also making good progress, and with a lot of process, with assessing implementation of the holistic framework. We've published supervisory material, and in this month reported on implementation across our membership. This year, we will also complete the first full-scale GME, using both year-end 2019 and 2020 data, designed to assess and mitigate any potential systemic risk in the global insurance sector. Delivery on the comprehensive and consistent implementation of the holistic framework remains key ahead of the review by the Financial Stability Board at the end of next year on whether to discontinue or re-establish the identification of globally systemically important insurers, so-called GSII. Again, we're on track on this. We have had a busy start to the year, and I'm pleased to say that we remain on course to meet the objectives set out in our roadmap. I will now hand over to Jonathan, but before I do so, let me thank on behalf of, in the front of this audience, but also on behalf of the Executive Committee, Conor Donaldson, our maître d' of this event and many previous global seminars and annual conferences. This is going to be his last global seminar. He's moving on to pastures new, but within the insurance sector and within a global role after the series of events this week. Thank you so much, Conor, for everything that you have done. With that, Jonathan.
Great. Thank you very much, Vicky. And fantastic to be here with over 750 participants from all corners of the globe, our members and our stakeholders who we very much miss meeting in person, but this is a very good second best. And to be able to reach so many people at the same time is fantastic. So thanks, Vicky. I will now talk a little bit about delivery against our current roadmap. So having agreed the post-crisis reforms at the end of 2019, just in time in many ways, the IIS's strategic plan then pivoted to focus on, I would say, two particular things. Firstly, it was about supporting our members as they face emerging and accelerating trends. Key amongst these, of course, being climate risk and Fintech. And for sure, the impact of the pandemic has further emphasized the importance of an effective supervisory response to both of these accelerating trends. And the second area that we pivoted to, particularly in light of our very broad membership, is to reinforce our commitment to implementation assessment and implementation support. So I'd like to talk briefly to both of those. So starting with accelerating trends, for sure, climate change impacts the core aspects of our mission of policyholder protection and helping to maintain financial stability. And insurers have a central role to play in a smooth transition to net zero and in helping economies and societies to adapt to climate change. Insurers are in the business of identifying, understanding, and managing risk, and these skills are going to be vital as we navigate climate change, and it will be important for insurers to play a leadership role, and I hope this is a message that comes through clear at COP26 later this year. But supervisors also have a key role to play to ensure that the micro-prudential, macro-prudential, and conduct risks from climate change are being effectively managed by insurers. And Peter and Dieter, I think, will provide more information on the IIS's efforts in this regard in their updates later. Moving to Fintech, the challenge of rapid technological change and innovation is also an important topic for the IIS and is a recurring theme for both members and stakeholders. So Fintech is not new on our agenda, but certainly the pandemic has exponentially increased the relevance of this work. Our Fintech Forum, which leads work in this area, was set up specifically to enable greater understanding and insight into Fintech development and facilitate timely responses by the IIS to this evolving landscape and to help give supervisors a clear understanding of the likely changes, the impact on the sector, and what it means for achieving our objectives of policyholder protection and maintaining financial stability. And this work includes looking closely at how technological innovation, whilst being excellent for financial inclusion and value add to customers, could also heighten existing risk, such as the potential for unfair discrimination or exclusion perpetuated by automated decision-making and increased cyber fraud and data protection risks. So the Iais is supporting supervisors as they deal with these emerging trends. And to this end, the Secretariat is working on a short note exploring how the supervisory challenges experienced during the COVID-19 pandemic have accelerated interest and demand for SupTech or supervisory technology in various markets. In addition, and in consideration of the rapid technological transformation we have all experienced through the pandemic, the Iais has also put in place a task force that will report on how supervisory authorities are approaching the mounting challenges associated with cyber risk and cyber resilience issues. And lastly on this topic, I want to mention that very recently in April, the Iais published a report prepared by the Secretariat and staff members of the Financial Stability Institute here at the BIS on redefining insurance supervision for the new normal. And this is a fantastic forward-looking piece that I'd encourage everyone to take a look at. It provides insights from interviews with senior officials from various insurance supervisory authorities and reflects lessons from the pandemic to help ensure effective insurance supervision in an increasingly digitalized world and increasing remote working, and preparing us, future-proofing us for disruptions which may come in the future. And we'll receive more information on this as part of the panel discussion later. Very quickly, a couple of other key topics. Firstly, pandemic risk and the pandemic protection gap. And our work on this is currently focused on a stocktake of initiatives underway in various regions, with a particular aspect of looking at the key supervisory considerations in this regard. And the Iais is in a unique position to draw comparisons and identify key issues for supervisors to consider. So we are working on this issue also together with the Access to Insurance Initiative, which has been active in developing information sharing platforms, including a series of webinars that explored the pandemic risk protection gap. Another key topic on as part of our 2021-2022 roadmap sets out a commitment to undertake more work on diversity and inclusion issues in the insurance sector. While we're at the early stages of this work, we hope to add value in sharing best practices and finding common principles that could help guide our members from around the world in advancing diversity and inclusion in their organizations, but also in the insurance market. And lastly, as I mentioned, implementation support remains key, and we will continue to reinforce our considerable program of support in this regard, together with key implementation partners like the Access to Insurance Initiative, the Financial Stability Institute, and the Toronto Centre, to help our members with the implementation of our standards, and that includes training, peer exchange platforms, and implementation assessment exercises. And Peter will provide further updates on our implementation work later in his session. So to conclude then, let me move on, and we'll now hear from the chairs of the Iais' parent committees, who will be able to provide more information on our work across our different areas. And over to you first, Peter. Thanks very much.
Thank you very much, Jonathan. As chair of the Implementation and Assessment Committee, I will refer to key recent activities under each of the 4 pillars of the Iais implementation strategy, as outlined in the so-called Coordinated Implementation Framework, or CIF. Let me first start with the Implementation Monitoring and Assessment pillar. The Iais evaluates the insurance core principles and ICP observance levels under the CIF's strengthened assessment program. The Iais Executive Committee recently approved the publication of the aggregate report on the peer review process for ICP 19, Conduct of Business. This was launched in November 2019, so this peer review mainly occurred during the COVID-19 pandemic. I'm pleased to share that we closed this process with a record high 73 participating jurisdictions, despite all the unforeseen challenges. Regarding the implementation assessment of the holistic framework supervisory material, the Iais carried out a baseline assessment, the so-called BLA, of 26 jurisdictions during 2020. And this included 16 Iais members identified as group-wide supervisors of at least one internationally active insurance group, or IAIG. Despite the pressures of COVID, we managed to take the work forward, and the aggregate report on the BLA was published earlier this month. We are now working on more intensive so-called targeted jurisdictional assessments of 10 jurisdictions, covering major global insurance markets by the end of 2022. Moving on to the second pillar of the CIF, the Iais promotes effective supervisory cooperation by facilitating information exchange amongst insurance supervisors through its multilateral Memorandum of Understanding. Its 76 signatories collectively supervise over 76% of global written premiums. Capacity building activities are the third pillar, and Jonathan just referred to it at the end of his intervention. The third pillar of the Iais implementation strategy. The pandemic has prompted an accelerated adoption of digital technologies to deliver training, lowering the costs for organizers and participants. The Iais continues to partner with organizations that share its capacity building objectives, most notably with the Access to Insurance Initiative, the A2II, for financial inclusion and sustainable development, and the Financial Stability Institute, the FSI, for online programs and materials that support the implementation of ICP's COMFRAME and the holistic framework. The fourth and last pillar deals with supervisory practices, and it is operationalized through forums and application papers. And there I have quite something to report. So in the first half of 2021, we saw the launch of 2 forums, the Financial Inclusion Forum in March and the Retirement Income and Pension Forum in May. These 2 new forums join the existing Fintech forum to complete the offer of platforms to share experience on policy and supervisory related issues, and to exchange examples of best practices with their peers. Moving now to the application papers. There we were quite busy over the last few months. We recently published an application paper on the supervision of climate-related risks in the insurance sector, developed jointly with the Sustainable Insurance Forum, the SIF. This paper, and I want to stress the first kind of this by a global standard setting body, provides insurance supervisors with concrete tools to further strengthen their efforts in assessing and addressing climate-related risks. The application paper also forms the basis for further industry engagement and capacity building initiatives. For example, it will be used for one of the pilot trainings of new climate training platform for central banks and financial supervisors. Launched ahead of COP26 later this year and coordinated by the COP26 Private Finance Agenda, BIS FSI, NGFS, Iais, and the Sustainable Insurance Forum. Only yesterday, the Iais Executive Committee adopted the application paper on supervision of control functions. This paper addresses issues related to the supervision of control functions as described in the ICPs and ComFrame, and highlights that effective control functions help supervisors identify and manage risks. To finalize, I would like to bring your attention to two draft application papers that are under development right now. The first one is the draft revised application paper on supervisory ecologies, which adjusts the 2014 application paper on the same topic. It describes the processes and practices for creating and managing supervisory ecologies for insurance groups with cross-border activities, according to the ICPs and ComFrame. This draft paper will be published for public consultation within the coming days. And second, the draft revised application paper on combating money laundering and terrorist financing under public consultation until 17th of July this year. This draft paper updates the 2013 application paper on the same topic following the 2019 ICP 22 amendment and various other developments. I hope I could give you an overview of recent activities of the Implementation and Assessment Committee. It's my pleasure to hand over to Gary for an update on the work of the Policy Development Committee. Thank you very much.
Thank you, Peter, and thank you to the Iais Secretariat for their efforts to organize today's virtual gathering and for their work over the past year. The efforts have been significant indeed. And hello to everyone who's joined the global seminar today. It's a privilege to take part in today's dialogue, and thank you to all the stakeholders who've been integral to the critical conversations that I've been a part of for the past several years. As many of you are aware, the Policy Development Committee has focused on the IAS's broad policy work. And during the last year, PDC and its subcommittees have worked intensively on several pieces of supporting material. This week, This week, the application paper on resolution powers and planning was adopted following public consultation that took place between November last year and early February of this year. The paper provides guidance for supervisors and resolution authorities in implementing a resolution framework, including setting up resolution tools, resolution planning, as well as issues around coordination and cooperation. Following public consultation, the paper has been further updated and refined. For instance, it now includes a more extensive set of practical examples from IAIS members. The paper and resolution of comments will be published later this week. We're also currently working on an issue paper on Insurer Culture. This paper explores the concept of Insurer Culture as a point of intersection for prudential and conduct risks, with examples to illustrate the broader role of culture in managing these risks. Understanding the various elements that make up Insurer Culture, which in turn inform certain decisions, behaviors, and practices across an insurer's business, can be critical in helping supervisors identify and address prudential and conduct issues in a more timely and effective manner. On June 30th, the Iais will hold a call to present in greater detail final versions and outcomes from the public consultation for the application papers on resolution powers and planning and on supervision of control functions, plus drafts of the issues paper on Insurer Culture and the application paper on supervisory colleges, which should be released for public consultation today. During the last year, PDC continued to work on treatment of infrastructure and strategic equity as part of the development of the ICS. And at the end of 2020, the Infrastructure Task Force, or ITF, prepared 2 surveys seeking input from members and stakeholders regarding the prudential treatment of investments in infrastructure and strategic equity. The ITF also liaised with key stakeholders to identify relevant data sources. The ITF is currently analyzing this data to inform its future recommendation on whether infrastructure and strategic equity should be granted a differentiated treatment under the ICS. That substantive work will continue over the second half of this year, and a recommendation will be delivered in early 2022. Earlier this year, we were pleased to launch the Operational Resilience Task Force, or ORTF. This group will identify and assess factors and developments that may affect operational resilience in the insurance sector. The ORTF will develop supporting materials such as issues papers and application papers in the field of operational resilience, specifically on IT third-party outsourcing and insurance sector cyber resilience. The ORTF will also develop supervisory material on the basis of lessons learned from COVID-19 pandemic on ensuring business continuity over an extended period. And finally, already in the initial stage of ComFrame implementation, the pandemic highlighted the benefits of having a common language to facilitate effective supervisory cooperation and discussions of group issues. Relatedly, despite the operational challenges presented by COVID-19, the Iais completed a successful first year of the ICS monitoring period, which provided a valuable lens through which to assess the performance of the ICS and evaluate the importance of global insurance standards in periods of global stress. The second year of the ICS monitoring period was launched at the end of April with a small number of revisions to address issues that were identified through data analysis and from feedback received in the first year of the monitoring period. And in the coming days, the Iais will publish the updated ICS specifications and confidential reporting package. So that concludes my update to you all on the efforts of the PDC, and I'd like to hand it over to my colleague, Dieter Hendricks, who chairs the Macro-Prudential Committee. Dieter.
Thank you very much, Gary. And also from my side, a warm welcome to all participants of the 2021 Iais Global Seminar today. The Macro-Prudential Committee has been busy with continued work on implementing the holistic framework, which includes, of course, executing the Global Monitoring Exercise, or GME, but not only, it also includes the development of further material, for example, on liquidity metrics and on macro-prudential supervision. Now, allow me to elaborate a bit on each of these elements. As noted by Vicky, the holistic framework is a key pillar of the Iais post-crisis reforms. And during 2020, it provided us with a solid basis to monitor the impact of COVID-19 on the global insurance sector. This year, however, we are performing a regular GME, the process as it was initially designed, with the aim to monitor key risks and trends and detect the possible buildup of systemic risk in the global insurance sector. Nicholas from the Iais Secretariat will give us some insight into the regular GME process under the panel discussion, which we will have later today. But let me already highlight now how we use the GME to also cover work on relevant risks like liquidity and climate change. On liquidity, we are currently developing metrics to assess insurers' liquidity exposures. These metrics are not intended to be binding requirements, but they will serve as a key monitoring tool. In November last year, the Iais published a consultation document on one such metric, using the so-called exposure approach. We will publish the outcome of this public consultation in the coming days. At the same time, we are now also preparing for the second phase of this work. So for a consultation document, which includes other types of liquidity metrics, including a company projection approach. We expect to publish this work for consultation in November and implement the final proposals in the course of 2021. On climate change, we are currently developing a special topic report for the Global Insurance Market Report, or also known as our GMAR. The analysis is focused on the insurance investment exposure to climate risk, based on data collected from Iais membership, which covers a wide geographic sample and around 75% of the global insurance market. The report will include exposure statistics and a forward-looking analysis on potential climate risks under different scenarios based on those developed by the Network for Greening the Financial System. The report, which will be published later this year, builds on the excellent work undertaken by our members in the field of climate risk. Now, while my remarks so far have focused on monitoring risks, there is another key element of the holistic framework that deserves particular attention, which is that of the development of supervisory material. This material sets out expectations for insurance supervisors which are currently implementing or refining their macroprudential supervision framework. The goal, in line with the holistic framework, is to help increase the overall resilience of the insurance sector and prevent insurance sector vulnerabilities and exposures from developing into systemic risk, also at local jurisdictional level. So to further support these implementation efforts, our members have been developing a set of application papers. 2 such papers have already been published in 2019 and 2020, respectively, and provide practical guidance related to recovery planning and to liquidity risk management. In the coming months, the MPC will finalize also the application paper on macroprudential supervision following public consultation, which closed last month. By helping supervisors strengthen their macroprudential supervision efforts within their own jurisdiction, this supervisory material complements the global initiatives at the Iais level, such as the GME. So this was my update from MPC side. Back to you, Jonathan.
Seemed to be a bit of a delay in unmuting there. Thank you very much, Dieter. Great. So as everyone can see, it's been a very busy 2021 so far. And despite the continued pressures of the pandemic, I'm pleased to say that we've continued to deliver on our roadmap. So now we're very keen to receive your questions on what we've covered so far. And as a reminder, you can ask questions using the Q&A function, which will be at the top right-hand side of the C-Event platform. But we've also received a number of questions in advance from stakeholders who we'll turn to first to share their questions with us live. And then we'll turn to those that come through the Q&A facility. So our first question is from Dennis Noordhoek, who asks on behalf of the Geneva Association. Dennis, we can see you. That's great. Thank you. Over to you.
Thank you very much, Jonathan and Vicky, for inviting me to speak today. Before I get to my questions to ExCo, I would like to take this opportunity to commend the Iais on the finalization of the application paper on the supervision of climate-related risks, a paper the Geneva Association responded to earlier this year. And we are particularly pleased to see several of our comments reflected in the final version of the paper, including the section dealing with the OSA. In this respect, we highlighted the fact that quantitative methodologies may be inappropriate to analyze long-term exposures and ask the Iais to give more weight to qualitative analysis. We also appreciate to see that there is recognition that quantitative methodologies should improve over time. And we are looking forward to continue to engage with the Iais and the wider regulatory community on this important topic. So let me turn to my first question. Several stakeholders, including a number of our members, have voiced concerns that the pandemic could have had a negative impact on the effectiveness of the monitoring period, as there have been limited opportunities for relevant stakeholders to meet and exchange. And in light of this, several stakeholders, including not least most recently Governor Quarles in his remarks at the NAIC conference, asked for an extension of the monitoring period. Now, I think Vicky has been very clear in her opening remarks, but just wanted to highlight that concerns are still out there and they relate to the effectiveness of the monitoring period and making sure that potential design flaws and irregularities are discovered and addressed before the ICS is going to be used as a PCR. And that leads me to the question as to how the Iais is going to make sure that the monitoring period is going to be effective despite the current challenges. And following up on that first question, I've got a second ICS-related question, and that is on sort of how has the internal work and thinking with regard to Solvency II internal models in relation to the ICS evolved, other than that was announced after, I think it was in 2019, during which the ICS was approved. So thank you very much for that and for giving me the opportunity to ask questions live.
Thank you, Dennis. So we'll hand over to Vicky for the first question, and then I'll ask Roman to come in on the second question on internal models. But yes, I can tell you a good degree of comfort around where we are on the monitoring period. But over to Vicky.
Yeah, thanks very much, Dennis. And on your first point around the climate-related supervisory application paper, thanks to the Geneva Association and indeed to many other stakeholders for their energetic responses on this, which we carefully contribute. I mean, we will come to this later, but this is, of course, an area which is a big strategic priority for the IAS going forward, and the ExCo meeting that we had yesterday and the day before in the form of calls, and the one we had in February reconfirmed this. I mean, the IAS is speaking with one voice about the importance of this topic. Now, on your question to me that Jonathan asked me to answer, there's, I mean, it is true that due to COVID-19, of course, there was massive uncertainty in March when we experienced a dash for cash, and we had these dramatic moves in equity markets, bond markets, and commodity markets. At some point, the oil price went negative. That we went ahead and adjusted timelines in all sorts of outputs, including the timelines for data submission and discussions in supervisory ecologies. But despite that, we had extremely good engagement from volunteer groups. I mean, in some cases, they felt that they didn't need, to our surprise, the delays that we had granted to them. They were very, very keen to engage. And also, as we're all learning through this episode, the new ways of working, somewhat paradoxically, actually improved the inclusion of some of these interactions with the volunteer groups. So we are on track, both with the first year monitoring of the ICS, which has moved from kind of standard development to supervisory conversation, and the supervisory feedback we've had. And this is kind of a view that is shared very widely by the vast majority of IAS members. There isn't kind of a call or even a discussion about delay that has been tabled. And because there's no need for it, because so far we are on track. Obviously, if we had been disrupted by events, we would have had to reconsider. But the event, we managed to be on track. And you know, as I mentioned, also in terms of the groups participating, we're having an increase in participation this year, which also puts us well on track. And obviously the shock that we saw in the first half, particularly of last year, but throughout last year, will actually serve, I mean, it's horrible to say that about a dreadful event, but from an analytical perspective, it will serve us well in actually monitoring how the ICS performs in volatile market circumstances, and when these kind of wide swings, V-shaped swings to economic and financial market developments. So very much on track. Hand over to Romain, actually.
Yes. Hello. I hope that you can hear me. Okay, very good. Thank you very much, Vicky, and thanks, Denise, for this question. And of course, good morning, good afternoon, good evening to everyone. So about the internal models, so the work on the possible inclusion of internal models as part of the ICS as a prescribed capital requirement is still ongoing, as it was planned in the overall ICS work plan that was adopted in 2019. And to this end, we are collecting what we call the additional reporting at the option of the group-wide supervisor of the volunteer group, so to help us informing this process. The decision itself will be made by the end of the monitoring period, along with the decision on the ICS as a prescribed capital requirement. But of course, we have this public consultation that is scheduled in 2023 on the ICS, and as part of this consultation, we will also consult upon the potential inclusion of internal models, as well as a gap plus valuation approach. So you will hear more about on that at this juncture. I just would like to come back to your question because you mentioned Solvency II internal models, but of course, we at the Iais, we are developing a global standard. So our discussion and our reflection on internal model, it's broader than that and not limited to what has been done in the context of the Solvency II framework. And handing back over to you, Jonathan.
Thank you very much, Romain. I believe we now have Stuart Wason with us from the International Actuarial Association. Stuart, let's see if you can come on screen. There we go. Just checking. I think we can hear you now, Stuart.
Ah, very good. Well,
great.
And there we go, the marvels of technology.
Great. Good to see you.
So good day and good evening to you all. And thank you so much for the opportunity to participate and engage in dialogue on such important questions affecting the insurance industry. The International Actuarial Association notes that the topic of sustainability is mentioned within the projects listed under High Level Goal 3 in the Iais 2021 roadmap. The term sustainability can have a wide variety of possible meanings to stakeholders. Just a few examples would be, is it a reference to the United Nations Sustainable Development Goals? Is it a reference to environment, social, and governance criteria used for screening investments? Is it a reference to IFRS Foundation work towards standards for sustainability reporting? And just another one I'd throw there, is it a reference to the overall sustainability of insurance and insurance markets going forward? So in light of those possible meanings, how is the IIS targeting its work on sustainability and differentiating it from that being addressed by the Sustainable Insurance Forum, SIF? Thank you.
Thank you, Stuart. And I think we can turn to IAC Chair Peter Braumüller to help us with that one.
I will try. Let me thanks, Stuart. Let me just say that you're completely right, but sustainability can have a variety of different meanings, but not only to stakeholders, but also to supervisors. So let me try to manage this. The sustainability issue, or ESG, is a very broad term, and includes also these issues related to climate change, where most progress has been made so far, as well as, of course, other UN Sustainable Development Goals, the SDGs, very well known, related to financial inclusion and sustainable economic development. Let me start that from a climate change perspective, we have various activities underway, many of those jointly with the Sustainable Insurance Forum, the SIF, as we set out earlier. We will continue to take this work forward to ensure that supervisors are well equipped to address the risks from climate change. And our work involves both risk assessment through the GMAS special report and supervisory practices, including on public disclosures and the recently published application paper on that topic. As a next step, we plan to undertake a gap analysis of the Iais supervisory material in order to inform areas where further work may be needed in terms of standard setting or supervisory practices. In terms of financial inclusion and sustainable economic development, the Iais activities are often undertaken in collaboration with our implementation partners, here in particular with the HUI. For instance, the UN Sustainable Development Goals are the HUI theme for the year 2021. Quite right. The Iais and the HUI are organizing a number of public and supervisors-only events to support this theme. And finally, on the issue of addressing protection gaps, this is another important related part of Iais work. And on the pandemic protection gap, we are currently focused on a stock take of initiatives underway in various regions, together with key supervisory considerations in this regard. But linking it again to the climate change, we are also working with HUI on capacity building initiatives aimed at addressing protection gaps from increasing natural catastrophes. That was probably only a part of the answer to the broad range of topics that could be covered under this item, but I hope this was helpful. Thanks.
Thank you, Peter. Thank you. And thank you, Stuart. And I think next we have Mary Frances Monroe from the IIF. Good to have you with us, Mary Frances. And over to you once you're able to connect. There we go. Mary Frances, I think we can't hear you at the moment.
All right, I think.
There we go. There we go.
Should have fixed that. Excuse me for that. First of all, I want to say thank you for holding this global seminar today. This is very, very helpful, and it reflects the continued stakeholder outreach of the IIS via both consultations and events. So thank you for hosting this today. My question revolves around insurer culture and conduct, and this was touched upon in Gary Anderson's comments. Both the roadmap and Gary's comments reflect additional IAIS work underway on insurer culture and conduct. I'd like to know, what is the current thinking of the IAIS about the differences among retail and consumer lines of business and wholesale or B2B insurance and reinsurance business in the development of guidance on insurer conduct of business?
Gary, do you want to expand on that one?
Yeah, sure. Thank you, Jonathan. And Mary Frances, thank you for the question. I guess first I'd start with the insurance core principles on conduct of business set out a number of well-established tenets regarding the expectation of insurers to treat customers fairly. These are based on universally understood outcomes that are sufficiently flexible and meant to be understood and applied within the specific traditions, cultures, and also legal regimes of individual jurisdictions. This IAS, through its diverse membership, recognizes that supervisory approaches to conduct of business tend to vary depending on individual national and regional circumstances. So such diversity should be taken into account when implementing our standards and related guidance material in order to achieve the universally understood outcomes of fair treatment or good conduct. And as mentioned in the ICP material itself, this encompasses concepts such as ethical behavior, acting in good faith, and prohibition of abusive practices, which are commonly accepted norms across jurisdictions. And our current work on culture, conduct, and governance does not aspire to ascribe a singular right or good culture for all insurers in all circumstances. And instead, it's, as you'll see in our upcoming issues paper on Insurer Culture, we suggest that an insurer's culture may be viewed through a variety of lenses to understand whether it appears healthy, sustainable, purposeful, and safe. For supervisors in any jurisdiction, this would entail understanding whether in a given context, a particular insurer's culture effectively promotes positive outcomes related to, for example, sound governance and fair consumer treatment as broadly described in the ICPs. With respect to reflecting differences between retail and wholesale insurance models and our standards, as you noted, here again, the ICPs are explicit in recognizing that supervisory approaches to conduct of business may differ depending on the nature of the customer and the type of insurance provided. In assessing whether a particular fairness outcome is being achieved, supervisors would be expected to consider the level of risk of unfair treatment, taking into account the nature of the customer, retail or wholesale, and complexity of the cover being provided. We're aware that some jurisdictions are intensifying their vigilance of conduct-related risks for wholesale customers due to the nature of recent insurance sector developments in these markets. The risk-based approach to conduct supervision is reflected in the ICPs and in previous Iais guidance materials, such as the application paper on approaches to conduct of business supervision. So hopefully that addresses the question, Marion. Thank you for it. And I'll turn it back to Jonathan.
Thank you, Gary, for expanding on that, and that's very clear. Thank you. And Mary, I think you had a second question as well.
No, I think Gary's comments covered both aspects of the question I raised, and thank you for that very comprehensive response, Gary. We look forward to reviewing that upcoming issues paper. Thank you very much.
Okay, perfect. Thank you very much, Mary Frances. All the best. Well then, I think next up we have a question from Don Figueron, President of JAFIA. Don, great to have you with us.
Hello, Jonathan, and thank you to you and your colleagues for hosting this. And good morning, good afternoon, and good evening. And I, for one, look forward to the day when I only have to say one of those when we're addressing each other. It's growing a little weary. I have two questions. I'll try to be as brief as I can. One, Jonathan, builds on your comments on climate. The other's related to cyber. In the consultation paper that the IAS put out, you talked about proper assessment of industry exposures to climate risks, that supervisors need qualitative information on climate risk management. This was mentioned earlier, and quantitative information on the exposure to physical, transition, and liability risks for the industry. And the paper noted that relevant public data may come from TCFD-aligned disclosures as this is becoming more common. So two questions related to climate. What are the IAS views on how supervisors can help improve the availability of ESG data? And secondly, what specific action can be taken by the IAIS and its member supervisors to address this issue? I can pause there, Jonathan, before asking the second, or carry on. I'm in your hands.
Great, thanks, Don. Let's, I think, take one at a time. And Vicky, maybe you could take this one.
Yes, thanks, and nice to see you again, Don. We did an IA and an Insurance Europe event recently. Good to see you again. Although I have to say, me too, I'll be glad when I'll have to say one of these good morning, good evening, good afternoons. It'd be nice to see people in real life. So on your question, I mean, in some respects, climate risk from kind of a supervisory regulatory perspective is no different to other risks, more traditional, if you want, risks that impact on the solvency, liquidity, operational governance, risk management position of supervised firms. And for any such risk, it is important that companies have the relevant information, qualitative and quantitative, for assessing and monitoring the risk. This is the starting point, and for disclosing it as well. So climate is no different to that. Now, of course, with climate, there are data challenges that are being sort of addressed increasingly more. But I think that doesn't take either supervisors or regulators off the hook in trying to assess the risk quantitatively as much as firms can. I mean, I do know that a number of firms are developing scenario analysis, for example, in trying to assess the risks around the exposures. There are scenarios being developed, including by the public sector. The NGFS has published some, for example, the Network for Greening the Financial System. And certain regulators are beginning to do these scenarios as well. And these are ways to gain quantitative information about the exposure to climate risks of companies. The second bit is public disclosure. I mean, since the publication of the TCFD, quite a lot has happened. The TCFD is, of course, based on essentially the qualitative statements, and they don't include detailed standards that firms can consistently follow. But thankfully, in that space, we've got the promising developments that are coming out of the IFRS Foundation that Peter referred to, that climate-related standards are going to be developed based on the work done on TCFD, and this will improve consistency. But in the meantime, and sort of more rapid progress is happening in this front ahead of COP26. But in the meantime, it is very important for firms to publish in line with the broad principles of TCFD, and that's what our guidance reflects. Now, we do have a role as a community of regulators to contribute to the availability of data in various ways. To some extent, by setting global guidance and through our application paper, we are helping our supervisors develop consistent ways of supervising, which in turn will generate more data from the firms as supervisors. So that's kind of one way of doing it. It's indirect, but I think quite effective. Then we do our own analysis. We've spoken already about some data that we have collected from the regulatory community and that we are using for a GMA publication, a special topic on GMA that's going to come out in the autumn this year. ExCo looked at some results. And finally, as a member of the FSB, we do participate and support the sort of global initiatives to further improve data apps that the FSB is undertaking. Our role there is to support it with the insurance sector expertise. So this is the way we are sort of, if you want, making a contribution towards that. Thanks.
Thanks, Vicky. Don, back over to you.
Thank you, Jonathan, and thank you, Vicky, for that answer. Turning to cyber very quickly, following the IAS Cyber Underwriting Small Group report in December, the first part of my question is, does the IAIS see a role for itself in fostering greater insurer resilience? And if so, I guess we could imagine that, like the FSB before, the IAS will undertake a greater exploration of the risks posed by insurer use of third-party service providers, including cloud service providers. And in that case, I would ask that the IAS endeavor to balance those risks with the substantial positive effects that we believe outsourcing can bring. For example, the benefits of cloud service providers in mitigating disruptions caused by a cyber event. So the first part of the question is the role with respect to resilience, and the second part is just a general update in terms of future planned stakeholder engagement. Thank you, Jonathan.
Thank you, Don. And I think Gary can talk about the work of a task force under the PDC on that front. Thanks.
Sure. Thank you, Jonathan. And Don, thank you for the question. Cyber risk and resilience is certainly an important topic and receiving ever more attention in this time of rapid digitalization and technological innovation. As insurance supervisors, we're naturally interested in the continued resilience of insurers as they navigate this changing landscape, as well as the impacts to sound underwriting practices vis-a-vis the challenges associated with measuring cyber risk. For these reasons, the IAS formed the Cyber Underwriting Small Group, which issued its report in December. We emphasize the importance of early and transparent stakeholder engagement and appreciate the feedback that the work of the CUSG is a good model for this. The IAS has established an Operational Resilience Task Force, ORTF, which I mentioned earlier. That's taking stock of existing supervisory practices with respect to cyber resilience, IT third-party outsourcing, and lessons learned on business continuity planning during the COVID-19 pandemic. This task force is in an information gathering stage and is aiming to engage with stakeholders towards the end of the year, followed by the development of issues papers supporting materials that is not standards, but rather supporting materials in 2022. Coordination and cooperation between international standard setting bodies is paramount on cross-cutting issues. The IAS is actively engaged in the FSB's work on cyber resilience. Specifically, the IAS is represented on FSB's Cyber Incident Reporting Working Group and has provided input to the FSB's work on outsourcing and third-party relationships. So hopefully, Don, this attempts to address your question. And Jonathan, I turn it back to you.
Thank you very much, Gary, and thank you, Don, for the very good questions. Good. So we've also had another question that came through as part of reaching out to our stakeholders, which has to do with minimizing regulatory fragmentation. And I might turn to Monroe to help us with that one, given that market fragmentation was such a key theme of the Japanese G20 a couple of years ago. And the question is really about how is the IIS balancing the need to minimize regulatory fragmentation on the one hand, with the need in certain cases to take into consideration local markets and regulation, and how is this balancing received by the FSB where concerns about fragmentation have received considerable attention. Thanks, Norio.
Okay, thank you, Jonathan. Okay, so let me address this question. We are all aware of the importance of the balancing the need to minimize regulatory fragmentation with the need in certain cases to take into consideration local markets and regulation. We do this through seeking consistent minimum global standards for the insurance sector that nevertheless provide some flexibility to adapt the details to local circumstances. We have previously contributed to FSB's work on these issues. In taking our work towards, we always consider these issues. The insurance core principles, of course, form a globally agreed minimum standard for insurance supervision, and our members commit to consistent implementation. We are aware that there are some areas, such as climate change, where there is a desire to have a more consistent approach, especially with regard to data gathering exercise. Meanwhile, there are other areas in which the local considerations may be more appropriate. It is important to recognize that the important role that the national and regional legislatures also play in setting out the insurance legislation. If there are specific concerns about issues of fragmentation, we would, of course, be interested in discussing these issues with stakeholders. I thank you. Back to you, Jonathan.
Jonathan, I can't hear you. Can others hear Jonathan?
Seems I was not very effective in clicking on the unmute button, or doubly effective. Good. So I was saying thank you very much, Norio, and I think we have time to go to a few more questions from the audience, and let's kick off on one which is directed at Gary, which is about future work of the resolution working group. So it's asking about the next steps, and in particular the planned further work on insurance guarantee schemes, and if there's anything to share on that at this stage.
Sure. Yeah, happy to address that, Jonathan. I guess I'd start with first with the finalization of the application paper on resolution powers and planning this week. The Iais and resolution working group will now start developing an issues paper on the role of policyholder protection schemes, or PPSs, in resolution, also known as insurance guarantee schemes, or IGSs. So issue papers are more descriptive and exploratory in nature, while the role of a PPS was considered to some extent in the recent application paper. The paper didn't provide a comprehensive overview of the role of PPSs in resolution. Instead, the issues paper will provide a more comprehensive overview of global practices around PPS and their role in insurance resolution. This paper would describe current good practices for PPS and could serve as a guide for jurisdictions wishing to establish a PPS. It will be an update to an earlier issues paper published back in 2014 by the Iais on this same topic. So development will start in the next few months, and then public consultation is currently planned to start in the second half of 2022. So hopefully that addresses that, Jonathan. Thanks.
Thank you very much, Gary. I have one question which I'm going to first direct to Dieter, which is coming from the audience. which is really talking about the relationship between monetary policy and the insurance sector, from which I guess I probably read in particular around issues of maybe low for even longer interest rates in the current environment, and perhaps can talk a little bit about how this is on the possible radar of the IIS, Dieter, if that's okay.
Yes, of course, Jonathan. I'll do my best. It is, of course, an interesting topic, talking about the links between monetary policy and the effects of that on insurance. Now, I mean, let's be honest. The low interest rate environment has been, I guess, on the forefront of the supervisory agenda for many supervisors across the world. I would say, particularly in the developed economies. And what we have seen, and then this was at least a topic or an item which was highlighted also through our COVID-19 monitoring last year, is that the low interest rate environment is here to stay. It's not going to be gone very quickly. We did see some rate increases in particular also in the US market, also in some European markets, but historically speaking, we are still at very low rates. In the course of last year, we've even seen very negative rates, all things which, if you would have asked me 10 years ago, we would have probably said, no, this is not possible. So I do believe that for supervisors, it will be a theme that we will continue to investigate into the near future, and it is probably also one of the risk teams that we will be picking up at the level of the IIS in scope of our global monitoring exercise this year. And together with that, we'll be looking at all the aspects of this risk. We will be looking at how insurers are adapting their business model and which effects that may have on the insurers themselves, but also on our supervisory agenda. This was a brief answer. I hope to be able to tell you a bit more after the investigations have been performed, but I hope this has shed already some light on what IIS is planning to do here in this area.
Thank you very much, Dieter. And good. So we have time for some more questions. We did get one in advance as well, asking for a little bit more detail on our diversity and inclusion theme that I highlighted earlier, and which I'm very happy that as a global community of insurance supervisors we can support. And I think the question was really really, well, first of all, welcoming the theme and asking, what is the opportunity for stakeholder engagement and dialogue on these topics, and recognizing the role that supervisors can play on this, but also the fact that this is a joint challenge between the sector and supervisors. So, David, I know this is a very important theme also for the NEIC. Maybe I can ask you to expand on this.
Absolutely. Thank you, Jonathan. It is an important theme both for the NEIC as well as the IAIS. So our 2021-22 roadmap sets out a commitment to advance the theme of diversity and inclusion, as previously noted. We aim to promote and facilitate the efforts of our members in advancing D&I in both their organizations as well as in the global insurance sector. We're in the early stages of this work and currently scoping out what work could entail here. We expect for ExCo to make a decision on what specific work should be within scope later this year. And this will likely include a member survey later this year. In general, our aim is to promote and facilitate efforts of our members in embedding D&I in their own organizations. We also aim at supporting the insurance sector's efforts in embedding D&I aspect in insurer organizations and their governance, including in their approach towards policyholder protection and fair treatment of customers, as well as achieving broader objectives related to financial inclusion and sustainable economic development. Beyond a regular dialogue and consultation with stakeholders on diversity and inclusion issues, we will also be looking into close collaboration because this is absolutely a shared challenge. Thanks, Jonathan.
Thank you very much, David, and looking forward to that work and that dialogue. Great. Well, we have another question, which is around one of our topics, particularly focused on the emerging market and developing economy membership, our EMDE members. So I'm going to hand over to our ExCo Vice Chair for EMDE issues, Suzette Fulgersang from not so sunny Pretoria today. And Suzette, the question is asking about the project that the Iais is undertaking aimed at exploring issues and challenges associated with implementing risk-based solvency frameworks in emerging market and developing economy countries. And what is the specific focus and scope of the project, and what is the time frame for completion of this project, and will it be the subject of an Iais consultation? Over to you.
Thank you very much, Jonathan, and good afternoon, everybody. We are in the early stages of a 2-year project to provide practical guidance to help members, and particularly EMD members, to develop risk-based solvency regimes. We will start off by undertaking a stock take on materials related to implementation of risk-based frameworks. I mean, as you all know, such regimes are integral for policyholder protection, maintaining financial stability, and supporting market development. In my own region, the African Insurance Organization recently showed that those firms operating risk-based solvency regimes were better able to respond to the challenges of COVID. And that was also evidenced in our own country. We see an excellent opportunity here for the Iais membership to share experiences and advice to support those jurisdictions that want to undertake this change. Thank you, Jonathan.
Thank you very much, Suzette. Yes, and I think that's going to be a very important project, and we look forward to, as we said, continuing to add value to all our membership, including EMDE members. And thanks for all the work that you do on that as well. Good. I'm going to see what other questions we have. We've got maybe a minute or two left. I see there is a question that's come through around logistics for our meetings for the remainder of this year. So that was a topic I was going to come to later, but as seen as how we've had a specific question on it, let me come to that. And it's very timely because we had a discussion on this on Monday around our plans for meetings for the rest of the year. And the question is specifically around the annual conference, which usually takes place in November. And I can say we, with the help of a small group of ExCo members, led by Mike Constein from the NEIC and other ExCo members, so a very big thank you from my side for the support in thinking through, first of all, the decision tree that will inform our decisions on meeting formats going forward, and secondly, the application of that decision tree to events in 2021 and beyond. And really the starting point for that, and what is most paramount, is the safety of our Iais membership and the Secretariat staff. There's been a number of improvements in certain jurisdictions with good progress on vaccinations. But unfortunately, we're still in a situation where that progress has been quite asynchronous. And there are other regions where progress has been much more limited. And also travel restrictions that stay in place for a number of our member jurisdictions. So weighing up that plus the obvious lead times that go into organizing these large events. The decision was made on Monday, and will be this is a good first opportunity to communicate it, that we will continue with a virtual annual conference in 2021. So on the one hand, very sad not to be able to see our members and stakeholders in person. On the other hand, I think we've also seen the fantastic possibilities to reach an increasing number of members and stakeholders through these virtual events as well. So I think we would all have preferred a different outcome, but we are supervisors and prudent by nature. So we will be moving ahead with a virtual annual conference and AGM in November. We do, however, continue to examine the possibility for some in-person committee and subcommittee meetings in the Northern Hemisphere fall. The other good news to mention, however, is that we do look forward, hopefully, to sunnier times next year, and we have decided on our dates and our venues for both our 2022 Global Seminar, which will take place in Dubrovnik, Croatia, in around the middle of June next year, and that we will eventually be able to join our colleagues in Santiago de Chile in November for an in-person annual conference in November 2022. So a slightly deferred reunion, but we look forward to joining of you all in person again next year. Okay, that's great. I think we have reached the end of the time for session 1 of our